John Belton, he is a portfolio manager and managing director for growth portfolios over at Gabelli Funds. John and his firm own shares of Netflix. And you take a look at the reaction, as we were just discussing with David Joyce. It seems like most investors taking this as a sell the news event. As you parse through these numbers, is that your knee-jerk reaction as well?
Yeah, thanks for having me. I mean, I think the top line numbers generally look pretty healthy. Good update on the subscriber number at over 325 million. That suggests that 2025 was another pretty solid year for member growth. I think the big disappointment in terms of the numbers is just on the margin guidance, 31.5%. I think that adjusts to about 32%, if my math was correct, if you back out that acquisition-related cost number that they flagged. So I think that's probably okay, but a little bit short of expectations. So you probably have slight negative earnings estimate revisions would be my first cut at it.
And John, what we've been talking about since the numbers came out is just the amount of spending that Netflix is going to have to do. First, when it comes to its content slate, then you think about this potential Warner Brothers deal, which has, taken a lot of twists and turns. And in their commentary, Netflix writes that they are going to pause share buybacks to accumulate cash to help fund that pending acquisition. Again, as an investor, are you concerned about the potential spending that they need to commit to here?
Well, I think the pause in the buyback is really no surprise, but I think if we take a step back, Netflix is coming off a couple of years where they've really held content spending more or less flat over the last few years, and that's allowed for some pretty sharp margin expansion. I think that content investment cycles for this business are going to kind of ebb and flow in multi-year periods, and we are probably entering a period of slightly higher content investment. But I do think if this Warner Brothers deal closes, one of the benefits is going to be a much bigger content library, which could, in theory, mean slower or less need to invest so aggressively to grow that library over time.
Yeah, it's kind of interesting, too, John. In the release, they talk a lot about how they see Warner Brothers as a complementary to Netflix. You would expect that. But in that context, they were also talking about all the competition out there. And actually, according to them, saying that they actually account for less than 10% of TV viewing time. And they're basically putting that up against not only the traditional TV companies, but also the YouTubes and the other streaming services of the world. I am curious as to whether you think they need to keep up with some of those other folks, or whether they can sort of be in their own sort of lane or niche, if you will.
Well, I think that is a sentiment that they've talked about consistently over many years, the fact that they don't just compete with the traditional media companies, the cable network companies. They also compete with any content platform that is driving consumer attention. So they've always competed with social media, with YouTube, and I don't think that's any different going forward. Do they need to continue to invest to keep up with that? There's nothing different. I think, of course, they do, but I do think they're carving out an interesting niche as something that stands alongside user-generated content and it's professional-generated content. And I think they'll always have that niche, and that will always help differentiate them.
I am curious that when you look at just the current valuation, and we should point out this stock has been on a pretty long downtrend for the last few months, some of it related to some of the specifics that we talked about today. But I am curious as to what you think sort of arrests that decline. Is it just it gets cheap enough that people come back in, or is it maybe what we hear on the conference call in about 15, 20 minutes time?
Yeah, Netflix, it's always been a stock where I think the stock has always followed the estimates, and you've had this multi-year, really positive estimate revision story driven by, you've had a reacceleration in member growth, but more than that, you've had this advertising story and a paid sharing story. And so you've had this couple-year period where earnings growth has really exploded, and you were always going to be entering this sort of more mature phase of the growth cycle. And then along with that comes this Warner Brothers announcement, which the stock has sort of been in the penalty box a little bit around that. So going forward, I think if they can just stabilize fundamentals and show that this advertising story still has legs, which I do think this guidance for doubling ad revenues again this year is another big positive in the release. I think that's how this stock gets going again, return to positive estimate revisions.
Right. I mean, you mentioned the stock in the penalty box. You think about how it's performed since it last reported earnings in late October. We're talking about a decline of maybe 30%. It's certainly, if these losses hold, going to be greater at the open tomorrow. But when it comes to the Warner Brothers deal, I mean, is there a number that you have in mind where it just wouldn't make sense for Netflix to bump this up any higher?
You know, I really want to stay away from talking about that deal for obvious reasons with our firm. But, you know, the way I'm thinking about Netflix's stock from a high level and going forward is, yes, the stock is derated quite a bit. It's getting to a really attractive valuation. That doesn't automatically mean it's going to be a good stock. But if you can get sort of a continuation in engagement growth, continuation in membership growth, ad revenues really starting to drive a re-acceleration in total revenue growth, and on top of that, if they end up with this great Warner asset, I think it still strikes me as a pretty interesting multi-year story. But investors probably going to have to continue to be patient with this one.